All right, traders, it is the 15th of July, 2017. My name is Jameson. Welcome to Behringer Trading. This is quiz number 4. And this unnamed chart is actually, it's in a downtrend, right? We can appreciate that there's a bearish descending channel that's present. We are rejecting the 50-day simple moving average. However, we're in a trading range, right? So markets are either within a trading range or they're trending. So at the present time, you can see there was trending, there was a breakdown, a markdown, there's a trading range, and then we break down a little bit, trading range, and then again we just start to resume this this bearish trend that's here. So at the present time, we have just that. We have some moving averages, the 200-day, the 100-day, and the 50-day simple moving average, all of which are descending here. So that kind of confirms that this isn't just a quick little snapshot, that the trend actually is declining here. But do we have are we starting to see a reversal here? I'm not quite sure. We do see some climactic volume that's present, but let's go ahead and take a moment and look at the other chart that had some of the graphics on it. All right, so here's the same chart with some overlays that I provided, and nothing has changed. Same chart, same time frame. And now we can kind of have some context to this bearish descending channel that's present. We can see that as prices rally into the upper trend line here, the supply line, that prices have rejected it as well as the 50-day simple moving average and is broken down, and that we're not quite we haven't tested the lower trend line here, so that maybe there's maybe buyers are getting a little apprehensive, and they're starting to enter their positions a little sooner than maybe a patient investor would. But let's take a look here. So we do have, we can see that prices became oversold relative to the trend, so they rally back within the trend. They break back down here, they confirm it as resistance, and then they rally higher into the 50-day simple moving average, and obviously they reject it. But now we confirm this prior level of resistance as support. We consolidate along it, and then right here is a key opportunity for bulls here to run through and break the actual bearish trend, and it didn't. It quickly reversed and closed at lows. Inside session, another attempt to rally through here. It failed, and then we broke down. And then we break down here with increased ease of downward movement below the lows here, losing this prior level of support that we've been attempting to establish, and we did so on a lot of volume. Additionally, you can see here as prices are breaking down, volume is expanding through here. So that tells me that we're seeing more sellers than we are buyers. So then prices again break down, and now look where we're actually at. This is where prior support is. We're in the process of confirming this level of support as resistance, and that's exactly what we do. And then we attempt to rally through. Look at this. This is the highest amount of buying volume that's present, that's available for the entire year on this chart. Yet we aren't able to reestablish this level of support. Demand is unable to overcome supply. We reject the 50-day simple moving average. We reject the upper trend line that's here. And then we break down on two bearish sessions here and on strong volume. Now we have narrowing price spreads, right? So now supply is having a difficult time overcoming demand, but price action confirms that supply is overcoming demand, because now we lose this level of support and we're confirming it as resistance, and then we break down. And a matter of fact, here you can see that on these sessions here, these two sessions are associated with pretty strong volume, and it had no follow through this level. There's some distribution that's present, and then prices break back down, and now we're kind of consolidating. Now again, we have the huge buying effort here, yet we have a narrow price spreads in this upper shadow. There's some distribution that's present, and then we just kind of chop around, and then very bearish session, no follow through here, kind of creates a spring. But following this spring, you would expect momentum to carry us back through, and it didn't. So there's possibly a bearish changing character here. And then now we open up really low. We rally into the 50-day again. No follow through. We can see here that volume is expanding. We have this big effort, no reward. This expanding volume isn't even able to overcome this level of resistance here. That hints that we're seeing some distribution. This might be some bearish absorption. Bears are absorbing the demand here because they're selling the demand. And then one more time, we can see that we're starting to rally, right? We're forming I'll get to the cup and handle in a minute. We're rallying higher, but volume here is less, right? We had a lot of buyers through here, and on this retest here, there's less demand into the 50-day, into this level of resistance, and then we start to reject it. So this looks very distributive. Now we are forming a cup and handle. The problem with the cup and handle is that it's trading against the trend, and we're still within the bearish channel. If we actually had a longer cup and handle that violated the boundaries of the bearish descending channel, then that would tell me that we've lost the angle advance. Bears have lost momentum, and that might be a change in character or a change in the trend that's here. But the fact that this observation of the cup and handle is within the bearish descending channel and the trend remains bearish, I don't give it as much weight. Okay, so here's the interesting thing. So this looks like bearish absorption. Now it looks like we're starting to see some distribution. So here we are. And now we can appreciate that this is actually an inverse chart of the S&P. So when I take around this little negative here and we hit enter, here's the S&P 500. And this is exactly what we've been looking at. And this is one of the reasons why I have been adamant on expressing that I think we're undergoing some bullish absorption. It's very difficult, but bottom line is you can see that we are unable to break this level of resistance, and we are confirming this level of resistance as support. And there are some key things that happened that bears were unable to follow through, and that resulted in the rally. So hold on one second. Okay, so now we can appreciate where price action's actually gone. So what we can see here is if I bring the inverse chart back up here, that prices actually broke down. So if you looked at the original chart and you were bullish and you thought that prices are going to break out, you were incorrect, because we're undergoing some bearish absorption and prices broke back down. So now we lost this level of support. So I would anticipate at some point in time that it's going to backtest, if this is going to rally and confirm this level of support here as resistance. So what does that mean on the true S&P? That means at some point in time, we have broken this trading range. We're going to rally through. We'll probably pull back here and confirm that this previous level of resistance is now support before we continue to rally and potentially achieve these upper price objectives that are present. So the amount of time spent in consolidation in that chart, which is visible here, we measure the amount of effort. So I measured the effort through here and then measured the effort through this entire consolidation period, and that gives us these price objectives. And as we can see, we've already achieved the $245 price target. So the next price objective would be $247, $252, and then $254. So I hope you guys found that both challenging and interesting. And there is certainly some benefit to thinking outside the box and reversing the chart to see if it actually changes your bias. All right, traders, have a great weekend.